The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Morning, folks. Welcome to the January 17th, otherwise known as the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. And let's make sure we have an extraordinary one. And the easiest way to do that, well, for me, it's to always remember that life is happening for us, not to us. That's right. When you and I can make that one little 2x4 shift, well, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. And even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to give us a call. We'd love to hear from you. Reach out to us at 877-927-6648. Now, if you'd like to call, but you can't, but you still have a question, well, you can always send me an email. For that, you send that to Steve at TFNN.com. And inside the subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, well, any and every ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a bit of a sea of red here. We've got all the U.S. indices trading at the downside. Percentage-wise, we've got the Dow off 1%, 353 points, 0.2 for the S&P, 8 points, 0.2 for the NASDAQ 100, 26 points. A little bit slightly less than 2 points for the Russell. That's 3 points, 0.4 for the semis, 12 points. Less than 0.1%, about 0.1% now for the trannies. That's 15 points to the downside. Gold's off 0.4%, $8.50. A little over 1% for the silver contract, trading down out at 24.12. That's off 25 pennies. Light sweet crude is up 0.6% or 51 cents. Natural gas up a 9%, 29 pennies, but still struggling to clear its the bottom of its profile. Now that's the. Let me switch over here. Give me a moment here. I see I want to go ahead and update these to the March contract, so give me a moment to do that. It's not going to change much in the way percentage-wise or where price is trading, but let's go ahead and get this out here and be accurate. Well, it is quite a big difference on the March contract for natural gas, only about 4% to the upside. Leading the charge, dollar-wise, the upside is Booking Holdings, $16. Enphase Energy, about 11 or 4%. Domino's Pizza, $10, 3%. MicroStrategy, 4% or about 9. Vertex Pharmaceuticals, 8 and change. That's about 2 7/10%. To the downside, Mercado Libre leading the charge off $32, followed by Goldman Sachs, which is a move of 7% to the downside or close to 7%, $24.50. BlackRock is off 17. Shockwave Medical, 15. Travelers Company down 11. That's about 6% to the downside. So let's spend just a moment here. We'll go take a look at Goldman Sachs and we'll take a look at the ES Mini. And of course, I want to take a look at anything that you want to. But you got Goldman Sachs. Was there any indication to you, now that you see these charts? Well, you don't see them. I have to change channels here, screens that is. So give me a moment. As soon as this screen pops up, the one in the upper left, each of you have your eyes on that, and each of you will look at that and say, oh, well, there was a tell with regard to how Goldman Sachs was likely going to respond to its numbers, and that Friday was bar number 9 of a TD 9 count. Now, what we can also see that transpired, I'll just blow up the chart here, make it easier to see. I think it'll be easier to see. See how the oscillator and change line went from red to green, and it did that on the trading day of November 12th. It certainly did it on January 12th and January 13th out there. Now, I don't know where price is going to end the day. If price it can hold 356.63, that's actually a bullish signal. And what I mean by that is the topping pattern will have taken price back to an oscillator and change line that is changing colors. That is a bullish test should that unfold. If price closes below it, then it says, okay, the first level of key support has failed. I want to get down to the next level. The next level for Goldman Sachs would be 348.56, but the more important level for Goldman Sachs is actually 346.25, the center of its profile. profile. Why, Steve-O, is that the important number? Well, because that is a bearish structured profile that price closed above for well more than 2 consecutive sessions out there. My experience is that a counter trend move, meaning a move to the downside in this instance, would find support not at the top of the profile, not that it can't, but typically where it will find support is that center line, 346.25. The cool thing about that is if you see price close below that, then you know you're headed back to its breakout level, and that's down at about 340.14, 346 happens to be the bottom of that daily profile. So that's what's going on. We take a look at the daily time frame chart for Goldman Sachs. If we go take a look at what's going on a weekly basis out here, really you've got price back below the bottom of its profile, back below its oscillator and change line. Of course, it's not as important where it is on Tuesday as it is on Friday. And lastly, on a monthly time frame chart, price back inside. It's been inside its profile for the last last month, and including this month, so December and January at this stage here. So not a ton of information coming from the weekly or the daily time, the weekly or the monthly charts, but certainly the daily has got all the meaning. Lastly, if we just finish this off by taking a look at a 30-minute time frame chart, somebody might be asking, well, Stevie, you just said that if Goldman Sachs can hold the oscillator and change line at day's end, that would be a bullish signal. Are there any signals that that's what it's going to do? And the answer to that question is no. Goldman Sachs on a 30-minute chart formed a Rhodes momentum indicator top that was confirmed at 2:30 in the afternoon on Friday. Now what price has done is it's closed below its breakout level. That's 355.77. No bottoming signal that we have. So the answer is no, I don't see a bottoming signal just yet on an intraday chart. So likely price is not going to hold that. Not that it can't. Just giving you the probabilities at this stage. There's a higher probability price going to reach 346.63 versus close above the daily oscillator and change line, which is at 356.23. So hope that helps everybody out with regard to what Goldman Sachs is doing. Since we're there, you might ask the question, what's the healthcare sector, the XLF, doing? I think that's another good question. That's why I asked it. Well, maybe it wasn't so good. But we do take a look at the XLF. The XLF actually negated its TD9 count top on Friday. It formed on Thursday, the TD9 count top. It was the bar following bar number 9. And on Friday, at a slight close just above it, we have a new profile that is formed this morning. It's 36.17. The high of Friday is the top of that profile. Price here is still above its green oscillator and change line on the XLF. So the XLF is stronger than the actual indice. My apologies. It's stronger than Goldman Sachs. I'm not sure what weighting Goldman Sachs is inside the XLF. It's in the top 5, not the top 1 out there. So the weekly chart for the XLF, just because Goldman Sachs is behaving poorly, we're not really getting that same message here. Excuse me. From the XLF, the ETF for the financial industry. We've got a caller on the line. It is Steve Wood in Maryland. And Steve wants to call and talk about Tesla and share with us a very cool finding, something that he developed, which is called the float turnover. And the float turnover, I'm going to have Steve take it away from here. So, Steve, thanks for calling. Thanks for holding. How are you?
Hey, Steve. I'm good.
Excellent. Hey,
I want to say
one quick thing, Steve. We're going to go to a break in about 15 or 20 seconds. Just define for folks what the float turnover is, and when we come back, we'll take a look at those Tesla charts that I sent to you.
Right. Okay. So a float turnover is the distance from the current day going backwards, where you add up the volume until the total volume counted backwards equals the floating supply of shares.
Perfect. Thank you. Hang on. We'll come back to this break where we take a look at Tesla. I'll get my float charts up as well, and you can tell folks how to interpret them. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So we're honored to have as our guest here Steve Woods. Steve wrote the book Float Analysis. You can actually get it at Amazon. One of our dinners, Mr. Bill in the den. Steve says he loved the book. Just had trouble getting reliable data on when the float actually turned over out here. It is one of the tools that we do have on the eSignal system out here. So it's nice that all that is calculated for us. And so, Steve, first of all, when I sent you those charts, you sent me a text this morning. When I sent you those charts, were they confirming what you had thought at this stage here?
Yes, definitely. Yeah.
Okay, perfect. So I thought folks no better to have the expert on. I have read his book. I love the book, but no better than to have the expert on discussing that with us. So go ahead. So I've got the daily and the weekly and the monthly charts that I sent to you up on our screen here in the Tiger's Den. If we take a look at the daily time frame, the float area over the last it really, in this case here, the number of days is going to change from time to time, but you can see that prices attain the top of the float channel. Is that correct?
That's exactly right. And it actually has broken through that top line. If you could see the box, there's a float turnover box. So you imagine that if you count up backwards the number of shares that are in Tesla, and in its case, the shares outstanding, let me go look here. Let's see. The shares outstanding are 3.2 billion shares, but there's only 2.6 billion that are in the float. So
Sure.
The idea is that as the stock came down at the very bottom, people started buying it. It's like accumulation buy. If the stock continues to go higher, it's like the smart money is buying all the available shares. Because in the last 3 weeks, if you add up the shares, it has the shares that traded, the volume in a backwards count, you get it comes to that total of 2.6 billion, which is the turnover, which is the float. So the idea is that it's not a perfect tool because you can have day traders going in and out in the sideways movement,
Sure.
but it gives you an indication of where accumulation is occurring. So the smart money buys at the bottom, the dumb money sells at the top. So if the shares are held tightly from this point that are underneath the price, then that price has to go up higher because there's very few available to trade. And so that's why it gapped up today, this morning, was because all the shares underneath the current float turnover box are being held tightly. And so the price jumps. Now, people in that float turnover could start selling into, because the people who bought at the very bottom down around $101 or something, like their low is at 101. Yeah. They're making 20% on their money right now. So they could also start selling.
So Steve, let me ask you a question.
Go ahead.
Because I have both the weekly and the monthly chart up on the screen. Do you use those at all for the float analysis, or are those time frames too large?
It depends on the stock. But I usually just use dailies and weeklies. Weeklies mostly just to keep track of them. And because Tesla came down so far, and then it seemed to have big volume occurring down in this little sideways move, I just tracked backwards adding up on a weekly basis. And you can see that it has broken above that little, that top line. It's actually a box that's being tracked. So you got to imagine there's a box adding up the volume backwards, and the highest part of the box is the top line, and the lowest part of the lowest price in the box is the bottom line. And these charts here don't exactly show you the breakout very well because they're using today's number,
right?
And you can see that the line has now turned up for the first time in weeks and weeks, months. First time that it's turned up. On the weekly chart, it's also turned up for the very first time, but you have to look really carefully to see it.
Yes, I see that.
Because they're not showing the box that the lines are based on. The lines are based on a box, right?
Got it.
Yeah.
So one of the keys. So you're calculating three. So this software is calculating three different squiggly blue lines. I'm just going to open up the daily time frame chart. I'll turn off the profiles just to have a little bit less noise out there. So what you're referring to here, Steve, is the lines themselves turning up. Is that correct?
Yeah, the channel lines that you can see there that are based on the box. It's a moving box. It's like a freight car on railroad tracks, and the tracks that are left behind are the channel lines. And what you're looking for is a float turnover at the bottom.
Yeah.
And so that's what you're seeing here. Is for the first time that line is turned up, and so everybody who's in that. Well, now you're showing the box, right? The box is right there. You can see it.
Yeah, I'm showing the box. So the odd thing here, though, so it was for me when I take a look at this box, just so you know, I mean, I have price with inside the box. But what you're saying is that if you take a look at the data points that it develops out here, watching for those lines to turn up is the bullish indication that you're looking for.
It can be, but that top line can also be a point of resistance. It has a mirror image quality to it because breakouts can fail and breakouts can succeed. So all we can say is that there's a hypothetical turnover of all the available shares for trading has just occurred within the last, we can count them there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 days. So it's a 15-day turnover, and it just broke above that. So if everybody holds tightly underneath, then that price is going to rise. But on the other hand, if they start selling into it, then it's going to turn down.
So I would say that from a short-term, thank you for that explanation, Steve. And from a short-term standpoint, as we take a look at the Tesla 30-minute time frame chart, what it did here as we were coming on the air at 11 o'clock was it confirmed a TD9 count top out there. So price is above its green oscillator and change line on a 30-minute basis, above the top of its profile. So the overall condition here is neutral. But what price should do is pull back and test either with the 125-ish area. Right now on my screen it's about 125, 27, and 28. But that number's going to change. And then below that is the profile level at 123.27. So while price has gotten up to the top of your float channel, and that's on a daily basis that we're looking at, the 30-minute chart says, hey, at least prepare for a retracement. And as I take a look at the daily time frame, Steve, I'm going to switch over to the daily time frame set of charts, because then we can annotate additionally what this Tesla is communicating to us. As price was at the bottom of that float channel, it was confirming a Rhodes Momentum Indicator bottom. That was on January 6th out here. And now price is above the top of that daily profile. We saw that on the black background chart. That's at 124.48. You're in bar number 6 of a TD9 count. This suggests to me that price should continue to move higher. That what that 30-minute chart is showing us is just simply that a intraday retracement is likely to occur. Tesla on the weekly chart, as a confirmed by the D-point pattern, it did it when it generated that bullish hammer candle back on the week of January 6th. Price at least here, target the 140.65 level. Tesla's real problem is the monthly chart. Monthly chart doesn't have anything for us to rely upon. In fact, the monthly chart's interpretation is that price wants to head lower, and that lower would be 56.94. So, Steve, hey, thanks so much for sharing with us the Tesla charts with regard to the float analysis tool, and we'll hopefully hear back from you again as you see something else that's hitting those lines. All right?
Okay. It's always good to hear your voice, Steve. You do great analysis. I use it all the time.
Thanks. Take care. We'll be right back, folks. Stay tuned.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David Wright has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Hope everybody had a nice holiday break out there. I know that I did, although the weather down here in Florida was basically freezing. Stevie does not like freezing weather out there, but it did turn nice yesterday, so I was able to get in some good golf out there, and it looks like we're going to get back to normal here. So we got a couple questions that have come in, really just two. Inside the Tiger's Den, this is from Coda, who wants to take a look at both natural gas and the U.S. dollar index. So we've got the U.S. dollar index charts up on my screen right now, Coda, and your question was, does U.S. dollar index have any TD9 count? So it most certainly does. If you take a look at the daily chart, you're in bar number 6 right now. But most importantly, what you can see is that price was moving lower, doing less relative energy. And in yesterday's market out there, what we have is a confirmed bullish reversal candle, bullish engulfing, confirming a Rhodes momentum indicator bottom. Now, what price is struggling to do here is to get above that red oscillator and change line, which it really needs to do in order to gain any kind of traction out there. That's U.S. dollar index. What last week occurred inside the U.S. dollar index is price negated its TD9 count bottom. We had a close below 102.87 that negated that signal. But those of you that are aficionados of the Chapman wave out there, well, you'll be happy to know that you are in wave number 7. Wave number 7 is letter G. You need to have a higher low. That can't take place until next week, but that is a potential bottoming signal out there. If we look at the intraday charts out here, you can see bottoming patterns, Rhodes momentum indicator signals out there. So certainly the U.S. dollar index is attempting to move out there. So, Code, I hope that helps you out with regard to the U.S. dollar index charts. We're going to go over and take a look at the natural gas chart out here right now. And we take a look at natural gas. I've just got the daily time frame and then the intradays out here. If you take a look at the daily time frames, this formed a TD9 count bottom. Bar number 8. That was on November the 11th. That was then confirmed the following trading session when bar number 9 completed on the 12th. So you do have a TD9 count bottom. What you're also trying to see occur today or unfold today is a Rhodes momentum indicator bottom out there. If we got a bullish reversal candle, that would help. But you also really want out here with regard to natural gas is a close above its oscillator and change line. Until that happens, Coda, the buy signal is somewhat suspect. So now you've got other battles up top. So you got the bottom of its profile, $3.40, another strong resistance level. 363 is resistance, 387 and 416. So natural gas is looking like it has potential, but it really needs to confirm that for us. So with regard to the monthly, I don't have the weekly and the dailies out, the weekly and the monthly time frame out here, but I think this gives you the information that you're looking for, or at least that I hope that it does. So thanks so much for taking the time to wait for it, and that's what we've got. So let's go take a look at, give me a moment here. I need to add an additional data feed. And then just simply get to this next question out here. Then I've got to open up this is going to take just a moment here to populate. So this has got a different data feed that's coming over here, make it easier for me to go take a look at the individual stocks. But I guess this is taking a little longer than I thought it was going to. Oh, you know what? I should have realized that because on another screen I've got a number of different charts that are out there. That's okay. We'll just be patient here. Everything is pretty close to populating. Not just yet. But let me read this next question that comes in. I go over to my black background charts. Procter & Gamble reports on January 19th. If you could bring up the longer-term charts, what price would you sell long-term positions, John, in Milwaukee? So I do have these charts here popping up. So let's actually to answer your question, we really want to take a look at least these 3 charts out here, the white background charts. These are the Goldman Sachs charts showing up right now. We'll change the instrument to Procter & Gamble. We'll try to answer that question. So January 19th, that's 2 days from now. You're asking what does it look like the charts for Procter & Gamble. So one, you're asking about long-term charts on a short-term decision, perhaps based upon their earnings. It could be long-term. But let's just simply try to see what the stock charts for Procter & Gamble are telling us. Number one, if we look at the daily time frame chart, you've got a TD9 count top that formed out here on December 13th. You have a Rhodes momentum indicator top on December 28th. So we can definitely see the top that's out here. But those tops, John, have led to nothing more than a sideways consolidation. So if price breaks through the sideways consolidation, it will look something like this. Let's use our drawing tool. Let's first get to our drawing tool. That makes it much easier to draw when you have a drawing tool. Hello, Stevie. So here's kind of the consolidation. What do you mean kind of the consolidation, Steve-O? Yeah, that's the consolidation pattern. So I would say that if price closes below 149.12, John, then that's going to take price back to its breakout level of 145.13, maybe even a little bit lower. But right now, what you have inside Procter & Gamble is a sideways consolidation with topping patterns. If we look to the weekly time frame chart, you have the same thing. You have a TD9 count top. That top confirmed on December the 23rd out there, and it actually formed on December the 16th. So a TD9 count top is in play out here. The oscillator and change line has changed colors. We just took a look at that with another instrument out there that had changed colors. Can't recall what it was. But either way, it might have been Goldman Sachs. Yeah, it was Goldman Sachs. It was TD9 count. So what price should do here is, we're actually, hold on. I don't have all the data. There we go. What price should do is pull back to test that level. Now, there's a profile that's out here, new profile, forming last week. 147.62 is strong support inside of Procter & Gamble. The oscillator change on is 147.13. Your question was, if you could bring up the longer-term charts, what price would you sell long-term positions? Well, again, I don't know what your total trading objective is. What I could say is that if price closes below the bottom of that profile, 147.62, and the oscillator and change line right now, 147.13, that's going to suggest a move lower. Now, you would say lower to where? The lower to where takes us back to the monthly profile at this stage here. We already know about 145.13, the TD9 count breakout level on the daily time frame. It's kind of lining up with what we're looking at on the weekly chart. So the first level, before you would say that, okay, there's been a definite change in trend, John, is at 145.13. Now it's trading at 151, and somebody might be saying, hey, I don't want to take that kind of heat. I don't want to lose $5 on a $150 position out there. Okay, but I just need to share with you the risk, because I don't know what the reward was that John was taking a look at from a long-term standpoint. Long-term, Procter & Gamble formed a TD9 count top, and that took price right back to its breakout level, 131.94. Sure, there was 1 month where price closed below it. The very next month, back above it. That was a one-hit wonder. Now what price is doing is taking on resistance, the top of its profile, at 152.08. So, based upon all of this, the daily topping patterns, sideways movement, could bust through that. The weekly topping pattern suggesting a move down to 147, and you're up right now on the monthly chart up at resistance, the top of that profile. So if you are itchy and you're looking to sell, then I have to say now is the time to sell out there based upon those chart patterns. If we look at a 30-minute time frame chart, it did form a TD9 count top. It did that at 10:30 this morning. Price pulling back, but finding support at the bottom of its, the center of its profile, 151.14 out there. So I hope that helps you out, John, at least with regard to what the Procter & Gamble has been doing. And then depending upon your entry price and your longer-term view on that, maybe that will all assist you. So thanks for taking the time to write in, and have a terrific Tuesday. Let me see if there's any other questions that have come in. There is nothing that has come in, so kind of quiet out there. Coda says that does help. Okay, perfect. Just going through here, I don't see any other requests inside the Tiger's Den. So where do we want to go now? Danny says, let's take a look at fuel cell F. Thank you very much for doing that, and I'll take further requests. The requests just make it really easy for me to do the show out here. So we've got 2 more segments left. We're just about to go to a break. We're going to get fuel cell up on our screen right now. Looks like it's printed out at 335. Bar number 7 for me today. Looks like what this wants to do, Dano, is go target the TD9 count breakdown level at 368. But we'll look at fuel cell further when we get back from this break.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So we got the Dow down 344, S&P's off 5, NASDAQ 100 is up 4, Russell's off 5. What other things we have? Anything significant that I see out here? Nothing significant. I was just trying to buy some time there while I switch back to those fuel cell charts. So, Dan, when we take a look at fuel cell out here, we can see it's in bar number 6 on a daily basis, price above the top of its profile, above the oscillator and change line. You know, is there an A to B equals C? Sure, I guess, but it's really extended. You need a bearish reversal candle to confirm a sell the D point. So the price target should become 368. That's a TD9 count breakdown level. If we look at the weekly time frame chart, you have price back inside its weekly profile. As long as it stays above 322, 392 becomes its price target. So you got 368 and 392. And on a monthly time frame chart, you just have sideways accumulation. Basically is what it looks like here that has been going on inside of fuel cell technology. If we take a quick peek at the 30-minute chart out here, 30-minute chart shows a TD9 count top. That took place about 13 minutes ago. So what we've got out here is a TD9 count top with price pulling back and finding support, at least at this moment in time, at its green oscillator and change line at $3.33 now. Yeah, I've got both data feeds working. Okay, good. So if price doesn't close below 333, Dan, this is nothing more than another bullish test of its trend out there and should continue to move higher. So everything that we're looking at here for fuel cell suggests that it should move higher. Dan, I hope that helps you out. Thanks so much for the request. The next request that came in inside the Tiger's Den is from Ron. And Ron wants to take a look at gold, specifically on the hourly time frame. So what did I do? Okay, good. So if we take a look at, so first thing, before we do that, just to keep in perspective here, what did gold do last Friday? Well, what it did was it negated its TD9 count top. It also got rid of its Rhodes momentum indicator signals out here. This suggests that gold should continue higher. Now, gold is an A to B equals CD pattern to the upside. I'm not showing that on this chart out here. The next price target is 1954 out here for gold. So until some other event takes place, that's where price is likely headed to. But Ron is interested in this chart. This chart here is the 60-minute time frame. As we look at a 60-minute time frame chart out here, what do we have? We have a Rhodes momentum indicator top. That has led to a TD9 count bottom. The TD9 count bottom taking place at 6 o'clock this morning on an hourly basis. Price right now is within inside its bullish structured profile. We've been above the center of that line pretty much since about 7 o'clock in the morning. Well, we can't say we've been above that line since 9 o'clock this morning. Typically, what will occur is, when I say that line, I'm referring to the bullish structure profile, the 1912.80 area, Ron. And typically what will happen is price will make its way higher to resistance. Well, the next resistance level, you can see that, is 1921.70. That is both the TD9 count breakdown level, and at 10 cents higher, 1921.80, that happens to be the top of the profile for the 60-minute time frame. So if I were to sum up the hourly chart for Goldilocks, you've got a nice TD9 count bottom with inside a bullish structured profile. Price should make its way up to the 1921 area. Don't know what will happen after that, but that's what it should do. If we look at the other time frame charts out here, wave number 7 bottom on the 30-minute chart. This has resistance at 1918. Not really seeing anything else substantial to assist you. So, Ron, if you need any information, additional information, just write back to me. Otherwise, there's your 1-hour gold chart and what it's communicating to both you and I. Dan had a twofer on Tuesday, and that second one was INMB. And as we take a look at this has been a bit of a rocket ship up here. Let me see what this is. INMB is Immune Bio. Immune Bio, the last couple of days, has gone from about 7 to 9.22, where it's trading right now. I think we took a look at this. I'm pretty sure you and I took a look at this. And give me a moment here. Doesn't matter whether we did or we didn't. So what price has done now, it's taken out that 855 level. 855 was a TD9 count breakdown area. Typically, you get past one, you go to the next. Well, in this case here, the next is really just simply going to be its most recent highs on a daily time frame. There was a Rhodes momentum indicator top that formed right around August the 5th. That becomes the target area. That target area is about 1075 at the high to a low of about 999. You're at 922 right now, but I don't see anything that is stopping it. You do have an A to B equals CD pattern to the upside. So if a bearish reversal candle were to form, you'd at least be getting some type of topping signal. Could be short-term from a daily standpoint. If we look at the weekly chart out here, the weekly chart has a beautiful TD9 count bottom. That completed the week of October 14th. Price is now above the top of its weekly profile. It did it with a nice wide-ranging bar last week. That suggests a run to 1058. So 1058 to me seems to be a real solid price target out there. Also, if price can get above 1058, then your next resistance level will be 1134 out there. So INMB, that is Immune Bio, looks like it wants to continue to run higher. As we look at the 30-minute time frame chart out here, what we will see is what? We can see a TD9 count top. That completed at the close on Friday. Price gapped up today. This tells us about a strong momentum move to the upside. Right now, price is dealing with resistance, the top of a profile that formed out there at 929. But if price can overcome that, it should continue. It should signal a continued move to the upside. What we've taken a look at here is the 30-minute, the daily, weekly, and monthly. We don't see anything to suggest that price is going to head lower. Not that it can't, but we don't see any signals just yet. So I hope that helps you out. How did I get that disclaimer? What the heck was that? Where did I go? Okay, I'm in something else. Sorry about that, folks. So, yeah, I think, okay, so that's all the information I've got for INMB out there. Thanks so much for the request. Take a quick peek here while we've got a couple minutes, see if there's any requests that have come in by email. And the answer is no, there is not. So what do we want to do here? What do we want to take? Well, we haven't really looked at the market itself. So let's go pull up the ES Mini. So let's get that. It's going to take a moment here to populate. Let's get that pulled up, see what kind of signal it is generating for us. While that's taking place, let me go see what's going on. You're welcome, Dan. Let me see what's going on with market breadth out here. Now, what the market should be doing, it really should pull back out here. Shoulda, woulda, coulda. Why should it pull back? Well, one of the reasons that the market should pull back, and I'll switch panels here momentarily, is because that advanced decline oscillator is in the extreme overbought condition out here. So we're just going to switch to the black background charts out here. You'll see that what you're looking at is panel number 2, the advanced decline oscillator. What is that? The oscillator is just the difference between two things that you're measuring. Here, what we're measuring is the 39 and 19 period exponential moving averages of the advanced decline data, the advanced decline line data. When it gets to 150, plus 150, then you're getting into overbought conditions. Well, the actual high reading that we have out here that took place back on the 12th, out last Thursday, 305.97. Yeah, that's well above the 150 level. Now, what that says to us is that says that longer term, we should still see higher highs in the market. But usually you have, in bearish markets, you have what are called 150 failures. Price gets up there and boom, shuts it right off to the downside. So shouldn't be unusual to see a sideways to lower movement out here while the New York Stock Exchange works through its overbought condition out there. And as we go take a look at the potential for an overbought condition, we'll take a look at what's going on with the 4 different time frames that you and I monitor here. Those 4 different time frames, well, that's going to be the weekly, bullish, majorly bullish, daily, majorly bullish, 240, bullish. 60-minute time frame chart is also bullish. This for the S&P 500, the ES Mini. Market breadth, very bullish out here. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Folks, so we've got the ES Mini chart up on our screen out here. This is the daily time frame. We can see the prices with inside. The profile is calculated by my white background charts. This is Ninja Trader. We have different set of profiles than the black background charts. When we have that, we use both sets of data. We consider that to be a gift versus something that's confusing. So what we have out here is prices likely, not guaranteed, but likely to go on and form a TD9 count top out there. That just needs a higher high. Well, it needs a couple of things, but at least it needs a higher high tomorrow, Thursday, Today's Tuesday, so it needs either Wednesday, Thursday, or Friday. It needs that higher high out there. There's resistance at 40.67 out there. That's the daily time frame. With regard to the intraday charts out here, there's just not a ton of information out here other than TD9 count tops on the 15 and the 10-minute time frame, both which took price right back to its breakout level of support. And that was at the 4,005.25 level out there, and that held. So I think sideways choppy market because that overbought condition by that as seen by the advanced decline oscillator. Last question as we close out the show is going to go from Dennis. Who is it? Dennis inside the Tiger's Den, who wants to take a look at Apple. And Dennis wants to know short term. So short term, we've got a TD9 count top on the 30 and the 15-minute time frame charts out there. In both instances, price pulled back to test support. The 15-minute chart was the center of its bullish structured profile. Price right now is above the top again. Looks like price is going to go make a run for that TD9 count top or high at 137.29. It closes above that, negates that signal. If we take a look at the 30-minute chart, also a Rhodes momentum indicator and a TD9 count top, but price right now finding support at that green oscillator and change line. That says Dennis momentum for the 30-minute chart, even though you have a top, is strong. So the signals here for both the 15 and the 30, even though you got those tops, is neutral. On a 65-minute basis, price still dancing above that oscillator and change line. Very strong move to the upside. So short term, which is your question, Apple wants to move higher. If you look at the 195-minute chart, price negated its TD9 count top. That says that it wants to move higher. 146.63 would be its message. 141.80 is the message of the daily time frame. So what is holding things up here? Well, turns out that in Apple, what it needs to do is close above 136.72. That's the weekly oscillator and change line. And Dennis, that is what is the thorn in Apple's side right now. Folks, stay tuned for great programming. I'll see you on wonderful Wednesday. Have a terrific Tuesday. Thanks for joining us. Take care.